Hello, everyone. Thank you for joining us today, and welcome to this educational presentation that I give every week, each and every week. Today, I have a great topic to present to you. We're going to be talking about my dynamic duo of trading. These are two trading methods that, when put together and used together, they really form this high synergy for success, and they can help you elevate your trading. For example, let's take a look at this chart, okay? Here's a chart, CEG, rather current. It just happened about a month ago. As we can see, this stock has been going up. Let's say you were lucky enough to have been long or even thinking about getting long this stock. But as with so many traders that I come in contact with, they always, project and listen to someone either in TV or in some chat room tell them what to do. And let's say that person, your trading guru or so, said, well, it's overbought here. It's gone straight up for the last week or two. Now's the time to either liquidate your position, or if you're more aggressive type of trader, to actually go short. Now, for the next 3 days, it looks like as if they were actually right because the stock did go lower. But here's what I'm going to explain to you today, and this is why most traders fail. Because the dynamic duo I'm going to be sharing with you today actually generated a signal here. Using the first method, where everyone thought it was going down, the first method actually generated a buy signal right here. And then the second method confirmed that buy signal so that you had a high probability setup that, even though not 100% guaranteed, had a large percentage that it was going to work out. And then, as we can see later on, within the next couple of weeks, the stock went up 30 more points. So this is what we're going to be talking about and teaching you today. We're talking about my dynamic duo of trading. So welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. I've been trading now for 47 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 19 years, and I was actually a specialist roughly for about 13 of those. Now, I traded through the crash of 87 and the bull market that followed. I made markets in all of those different time periods. And if there's one thing I noticed and learned in my trading career and also in the years that followed, is that most traders fail because they take themselves out of the game. They're not listening to what the market's telling them. They're actually listening to some guy on TV, some guy in a chat room. They're listening to some economic report or some earnings estimate. But really, that really has no high level of consistency. And I know that from firsthand experience, because when I first started trading, that's the way I used to trade myself. I used to base everything off of what some trading guru that I was getting their newsletters from. I would listen to all the economic reports coming out. I would have tons of indicators on my screen. Unfortunately, nothing seemed to work. My first year or two, I almost had to leave the business because I really wasn't seeing any positive results. My mentors taught me the things that have sustained me now, the things I teach all of my students around the world, and that's basically to look at the chart in front of you, because most likely it tells you just about everything you need to know. And with a few simple but powerful tools, you'll be able to listen to the market and elevate your trading. So that's what we're going to be talking about today. But before we begin, as always, we are required to share this with you. Please take a moment to view our disclaimer. I'm going to show you a lot of performance results using the dynamic duo, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, since we are an educational company, all examples are strictly for educational purposes only. Now, if you haven't done so already, I see a lot of new names in our participant list today. If you haven't done so already, please feel free to follow us on Twitter. There's our handle right there. I would suggest copying that down, because every day I post different images, anywhere from signals that our strategies, methods, or techniques have generated, or else I post some financial wisdom that you can help accumulate and help you with your trading along the way. So there's lots of great free education on a daily basis. Please feel free to follow us on Twitter. Now, as I often say in my free Wednesday webinars, remember, we are different from other webinars you may have attended. If you've come here today thinking I'm going to tell you what the market's going to do, did it bottom out today? Is it going back up? Or is it going to head lower? Is this the beginning of a downtrend? Or what stock to buy or what stock to sell? Remember, that's not what an educator or mentor does. A good mentor teaches you how to trade, but does not trade for you. Remember, we do not want you coming to specialist trading and saying, tell me what to do. What do you think I should buy or what do you think I should sell? That, in my opinion, is a recipe for a disaster and what most traders do. That's why most traders, it's been estimated 80% of all traders fail. What we want to do is get you on the right track to become a consistent trader, and that's by teaching you how to trade. So my goal as an educator is not to force feed you signals, but to teach you how to trade with a specialist edge. My mentors taught me the same edge some 47 years ago, and I feel that's what sustained me now for 47 years. And hopefully I can do it to you as my students, okay? All right, now a few announcements before we begin. Please, if you have any questions, let's wait till the end to ask the questions. I promise I'll get to each and every one of them, but I have close to 150 slides to share with you, so I don't want to stop for every slide to answer a question. And oftentimes, your question is answered on the very next slide. So if you do have a question and it's not addressed, please write it down. I promise I'll get to it at the very end. Also, this is being recorded. So if you have to leave early or if you have any technical issues, don't worry. Each and every one of you will be sent a link to this recording. You can watch it whenever you like, okay? All right, with that stated, let's begin today's educational presentation. Let's get right into it. Remember, we're talking about a dynamic duo, two highly consistent methods that are joined together. So let's talk about the very first method. And this is a method that I use in my personal trading even to this day, and this is strategy number 4. All right, so what exactly is strategy number 4? Well, it's for all traders, beginners to advanced. Doesn't matter how long you've been trading, if you just started trading, or if you've been trading 30 or 40 years already, all right? Everyone gets the same basic rules. It's designed for traders looking to catch those quick momentum moves. Now, when I was first taught this method on the floor of the exchange, I used it and I was in and out of moves in about 2 or 3 minutes, okay, because I was on the trading floor. But we've developed ways in which to hold on to positions days, weeks, even months if you'd like. Now, its intensity level, if 1 is the most intense and 3 is the most relaxed of all strategies, it's right there in the middle, very moderate intensity level number 2. It only uses one indicator. That's how simple this process is, and I'll share with you what that indicator is. The reason is because it's based off of a pattern. It's a pattern recognition strategy, and this pattern repeats itself over and over again in any market and in any time frame. So you can use it in any direction as well. Now, our edge here is consistency. So what does that mean? Well, it does not mean that every trade is going to be a winner. You see, a consistent method is one that has a 2 steps forward, 1 step back approach. We know that we will have small losses from time to time. That's okay, but you want a method that's able to recoup those losses rather quickly, oftentimes on the very next signal. So that's what consistency is, a 2 steps forward, 1 step back approach. And strategy number 4 is very, very consistent. All right, so here are the rules. I'm going to give you 2 of the rules to strategy number 4, all right? Rule number 1, buy signals can only be entered above the 50-period moving average. Now, conversely, sell signals can only be entered below the 50-period moving average. So why is this so important? This seems too simple. Well, the reason is if you're buying below the 50-period moving average, you actually are swimming upstream. You're going against the current. All right. And the odds are that it will not work out. Sure, every once in a while, you'll get a great buy signal that is below the 50-period moving average. But remember, it's about putting the odds in your favor. And over time, if you're out of sync with this simple rule, you won't see any progress in your trading. Take it from someone who knows. All right. This is the way, once again, I used to trade. But once I started applying this rule number 1, where I'd only buy above the 50-period moving average and sell below, my trading started becoming more and more consistent. So right here, as you see here, the majority of the bars in this generic chart are above the 50-period moving average. So what is the market telling us? Not some guy in a chat room, not some earnings report. What is the market telling you? It's telling you it wants to go higher. The overall trend is up. And we always want to be in sync with the overall trend. Now, conversely, price here is below the 50-period moving average. So what is the market telling you? Not me. Not some guy on TV. What is the market telling you? It's telling you the overall trend is down and it wants to go lower. If you're in sync with the overall trend, you've already elevated your chances for success. But let's take it up a notch. Let's go to rule number 2 now, okay? We're talking about the overall trend. Let's talk about the short-term trend. Rule number 2 states that we want to look for a bar that closes in the top or bottom 25% of its range. All right. Now, obviously, if we are above the 50-period moving average, we want to look for bars that close in the top of their range. If we are below the 50-period moving average, we want to look for bars that close in the bottom 25% of that range. Now, if you're still confused, let me share with you what that looks like. All right. All right. So the overall trend is down. Oops, here we are. There's a bar there, okay? Now, if you say, well, I don't understand what the top or bottom 25% means. All right, well, if we take any bar, doesn't matter if this is a monthly bar or a 5-minute bar, you want to divide it by 4 separate but equal parts and see where it closes. If we close in that top quarter, the top 25%, what is the market telling us on the short term? Remember, if we close in the top 25% and we are above the 50-period moving average, the market is telling us that it wants to go higher on the short term. So now you have the overall trend and the short-term trend in sync. There's no reason to overcomplicate your trade by looking at 2 different time frames, looking at 2 different charts. All you need to do is look at one chart and see if it's above the 50 and if it closes in the top 25%. Now you have the overall and the short-term trend in sync, which is going to increase your odds for consistency tremendously. Now, conversely, if you have a bar that looks like this, divide it by 4 separate but equal parts, and see where it closes. Well, it closed down here. If we close in that bottom 25% and we are below the 50-period moving average, what is the market telling us? Not me, not some earnings or economic report. What is the market telling you? Well, it's saying that it wants to go lower on the short term. So now if price is below the 50 and you see this pattern closing in the bottom 25%, you have the overall and the short-term trend in sync. Very, very high probability for a positive trade. Now, once again, let's look at that generic chart. We close in the top 25% and we are above the 50. And look, price went up for the next, well, we don't know. This could be a monthly bar, so for the next 5 or 6 months, or it could be a 5-minute bar, but it doesn't matter. It's all relative. Now, I know a lot of students, especially new students, say, yes, Steve, but look at what happened to here. Okay, it went straight down. So this really didn't work. Well, no, listen, we're not saying that it didn't work. We're saying that we want to only take buy signals because this will give us a higher probability for success. Because look at, let's say you had seen this and said, wow, it's going lower, I'm going to sell. Well, look what happened on the very next bar. It went up, and on top of that, it closed in the top 25%. And look what happened after that. So how well did that sell work based off this one down bar? Not very well. This is how powerful these 2 setups can be. The same thing applies here. We are below the 50-period moving average, so the overall trend is down. We close in the bottom 25% right here. And look what happened. Now, these make up the very first 2 rules of strategy number 4. So let's look at some strategy number 4 examples, and we're going to share with you these that are taken from using our platform, the PTS Primo charting platform. And the beauty of this is that it's all programmed in. Now, when I first started, I had to apply the 50-period moving average on my chart, any chart I was looking at. I had to look for with a magnifying glass. I had to look and see for bars that closed in the top 25%. Well, guess what? It's all automatically generated for you. So we don't need to apply the 50 if you don't want to. And you don't need to look and identify bars that close in the top 25%. It's already auto-generated on our platform. For example, as we look at this example in PCAR, all right, we have 3 buy signals here applied by using strategy number 4. And they're obviously above the 50 because they wouldn't be generated unless they were above the 50. And if you look and notice, each one of these bars closed in the top 25% of its range. We're in here, here, and here. Now, we have other bars that close in the top 25% of their range and are also above the 50. But remember, there are 2 more rules left based on this pattern that I said that repeats itself over and over again. So if they didn't meet the requirements, a signal will not be generated. But we had 3 signals all generated here, and ultimately you could have potentially captured 30 points had you held on. All right? This is how powerful this method is. Here's another example. This was in PDD. This just happened a month or so ago, right at the very top of this little up move. We closed in the bottom 25% of its range, and we're below the 50 because it wouldn't generate a sell signal unless it was below the 50. And let's say you were long this stock. Well, you could use this. A lot of our students don't like to go short, but they like to use it as an exiting tool. Well, you could have exited, taken your profits out, and on top of that, you could have missed a 25-point move to the downside. Or if you wanted to, you could have gone short and taken advantage of the 25 points to the downside. Now, remember we talked about consistency. This means that not every trade works out. For example, this is a strategy number 4 buy signal. It's a valid signal. It's generated because it's above the 50. even though we don't show it here, it wouldn't be generated unless it were above the 50. And as you can see, it closed in the top 25%. So the first two rules were met. Let's say you decided to go long. Well, look what happened. Tesla fell out of bed. In fact, it fell 60 points. If you weren't using a stop, potentially you could have lost 60 points. So every once in a while, you will wish you were able to filter out some of these setups that aren't working that favorably. What if there was a way, any type of way, that we could increase our odds for success? Well, yes, there is. This is where the second and most important part of the dynamic duo comes into play. This is method number 2, and we call this the pet D. Now, this was something I was introduced to some 4 decades ago on the floor of the stock exchange, and I use once again to this day. And let me share with you, if you're not familiar with what the pet D is, talk about some of the highlights, okay? So what exactly is the pet D? Well, it's a proprietary algorithm. Trust me, you want it to be a proprietary algorithm, because when I used to use this, we used to call it the formula. And what we had to do was calculate this formula by hand on a handheld calculator. And it was so cumbersome, so complicated, it was difficult to even trade. So we could only use it for the end of day setups, because there was no way we could use it intraday, because you'd be on your calculator 24/7. So with the help of high-speed computers and programmers, we've developed it into a proprietary algorithm. So we've taken all the hard work out of it for you. There's nothing you need to do, but look for the colors, because it's a color bar tool. It colors the bars either green or red. That's it. So each bar, once it's applied, will either be colored green or red. Now, we use this as a short-term trend identifier. So we get a series of green bars, it's telling us that the trend is up. A series of red bars, we now know that the short-term trend is down. As you see here, when bars are colored or outlined green, the trend is up. When colors are outlined or filled in red, the trend is down. Now we can apply it to this older chart of Zion right here. This is why most traders have trouble with the trend, because they usually find out too late. Okay, most trending indicators, things that I've used in the past, things that other so-called educators talk about, they're a little bit too slow and they're delayed. For example, most traders wouldn't know you were in a downtrend until right here, right? And just when you get out or short the stock, well, look what happens. It goes right back up. But when we applied the pet D, we knew well in advance, way up here, because we had a series of red bars, that it wanted to go lower. It was telling us the trend is down. And then right here, when you had a series of green bars, 3 to 4 green bars, we knew that the trend was changing. And look what happened. So that's how sensitive the pet D is. And the beauty of the pet D is that it literally translates what any market wants to do. You can apply it to currency pairs. You can apply it to crypto. You can apply it to stocks. You can apply it to 5-minute E-mini futures. It makes no difference what you apply the pet D to. It will tell you and translate what the market is doing. Okay, so it's all of these things. So how are we going to apply it? Well, by using it, by one of the best ways to apply it is as a signal confirmation tool. We are going to confirm the signal. And you can confirm any signal. It can be one of yours. It can be a strategy that you trade. It can be coming from another educator, or it can be something that we are talking about. In this case, strategy number 4. So what happens when we combine the pet D with strategy 4? Well, we have these two methods combined that create the synergy for success, and we call it Specialist Trading's dynamic duo. So here's how it works. If strategy 4 generates a buy signal, we're only going to trade that strategy 4 buy signal if the pet D colors the bar green. That's it. Now, it doesn't care if the bar before it is red or a number of bars are red. It doesn't care what the color of the bars are after. Now, sure, it can help, but it really doesn't matter. All that matters is that the bar above the buy signal is colored or outlined green. Conversely, if strategy number 4 generates a sell signal, we're only going to take that strategy 4 sell signal if the pet D colors the bar below that red arrow red. Okay, it's that simple. But by applying these two highly consistent methods, we really form the synergy for success that we call the dynamic duo. So let's look at some examples, and let me show you how powerful these two methods are when combined together. Okay, Here's the first one. We're looking at Microsoft. Okay, this just happened about a month ago. Now it's hard to tell what it wants to do here. It's kind of going up, going down. Looks like it's going back up again. Here's how simple it is on our platform. We developed the platform to make it simple to trade the dynamic duo. So all you have to do is go up to the green strategy tab up here, click on strategy number 4. Okay, and in the drop-down menu, if you want to see if there's a signal generated, click on signal arrow. And you'll see that yes, there was. But remember, we're trading the dynamic duo. We want to confirm that signal. So we have to apply the PET D. So once again, we just come up to the far green here and we click on PET D, and it automatically changes the colors either green or red. So now we see that we had initially green bars and a couple of red ones, and now we have one green one. But it doesn't matter what these colors of the bars were. All we care about is what color is the bar or outlined above the buy signal. So ask yourself, what color is it? It's green, right? So this is a valid dynamic duo buy signal. Now you have the confidence to pull the trigger, to take the trade, because this is a high probability setup. And look what happened. Coming into April, the stock was up 22 points. All right, let's look at another example. This one's an EA, okay? Once again, just about 3-4 weeks ago. Hard to tell what this wants to do here. We're not sure if it's in an uptrend or rolling over, so we click on strategy 4. In the drop-down menu, click on signal arrow, and we see here that there is a strategy 4 sell signal. Now, rather than just take it, because what if we had taken it that day? Well, look at the next day, it went up. Now, most likely you wouldn't have been stopped out yet using one of our generic stops, but let's just say you took the trade. Well, remember, you would have gotten a little scared here and maybe canceled yourself out. But if you had applied the PET D over here, you would have seen that this was a valid strategy 4 dynamic duo sell signal. Why? Because the bar below the sell setup was colored red. So once again, this is a valid dynamic duo sell signal, giving you the confidence to take it and to stay in the trade for a couple of days, even though it was going against you, because ultimately it dropped 7 points. Now, let's say you just used it as a exiting tool. Let's say you were long this stock and you just wanted to get out. You don't want to go short. Well, you could have saved yourself a good 7 points and looked for ways to get back in once you got a dynamic duo buy signal. That's how simple it is. There's no looking at earnings. There's no looking at economic reports or earnings estimates or what some guru was saying in a chat room. Remember, consistent traders learn to listen to the market. They don't listen to outside sources because there's not a lot of consistency in that. Once again, take it from someone who knows, someone who traded that way 47 years ago. Once I stopped relying on outside sources to tell me how to trade, that's when I started to become consistent. Now, all of our methods, all of our techniques, all of our strategies are not based on my beliefs on what I think is happening. They're all based on market behavior, what the market is saying, not on what I'm or someone else is saying. Here's another example. We looked at, I believe we looked at this earlier, I tweeted about it. Here's a buy signal at the very bottom of this sell setup, okay? Now, we could have taken this, but in order to have a higher level of consistency, we apply the PET D, and we see that the bar above it is green, outlined green. Now, even though all the bars are green, yeah, remember we talked about this in the beginning. Look at these last 3 or 4 days. Even though they closed lower and the market was heading lower, all of these bars were green. So the PET D was telling us, listen, we may be heading lower, but we're still in a short-term uptrend, I'm sorry. I'm translating this, according to the PET D, as we're still going to be okay because the PET D is telling me that the bars are green and though it's okay, even though we're selling off. So this is a valid dynamic dual buy signal, and that's where we had the nice 30-point gain in the following weeks coming into April. As we look at Meta, okay, this just happened a couple of weeks ago, or this last week, I should say. All right, here's a buy signal at the very low of the sell-off. It's colored green, so this is a valid dynamic dual buy signal. Stock went up 35 points this past week, just in about 3 or 4 days. Here's a sell signal, okay? Now, sure, it looks like it's falling out of bed, but how many times have you sold based on a really bad day and then it goes right back up the next day? So we want to be assured that it is going to go lower. And even though it's not guaranteed, there's a high probability that it will go lower if we apply the PET D. And the PET D is confirming this. It's saying, yes, it's colored red. So there's a big chance that it will work in our favor. And yes, it went down 18 points in the next 4 days. So if you had shorted that or bought some puts, you potentially could have captured 18 points in less than a week. All right, here's a sideways chart in CTAS, okay? Now, most traders would say, well, there's really nothing happening. It's green, it's red, it's green again, and it's still going sideways, so I really don't know what to do. Well, if we apply strategy 4, we have two buy signals, and they're both valid dynamic dual buy signals because they're both outlined green. So even though nothing much is happening, if you're not stopped out, stay in the trade, because look what happened. You could have potentially captured 75 points in just 1 month. Sure, you would have had to hold on a little bit longer, but wouldn't you have liked to have held on for an extra couple of weeks to make that 75 points? Let's look at an example here in Charter, all right? Obviously, this stock is headed higher. We're making higher highs, higher lows, but the bars are telling us something different in the PET D. Some are red, some are green. So what do? Well, we apply the strategy number 4, and we see that we have a dynamic duo sell signal right here. Why? Because it's a sell signal and it's colored red. So even though it looks like we're headed up, if you learn how to listen to the market, you would have said, no, this is most likely going lower. And look what happened. It fell 92 points in the next couple of weeks. And if you missed that, there was another sell setup right here where you could have caught that for roughly about 40 or 50 points to the downside. All right, so let's look at some other time frames and some other markets. Here's a weekly chart of Costco. Once again, it appears as if nothing is happening at all, just kind of going sideways, right? Well, let's go through the process. If we're in a range market, we're always told, well, stay away from that, because when you buy, it goes lower. When you sell, it goes back up. But if we click on strategy 4, in the drop-down menu, click on signal arrow, we see that we have a buy signal right in the middle of that so-called range market. And if we apply the PET D to confirm it, we see that the bar above the buy signal is colored green. So this is a valid dynamic duo buy signal, and you could have potentially captured 225 points. And remember, this is a weekly chart. So roughly in about 5 to 6 months, you could have captured 225 points if you had taken this signal. Here's a 4-hour chart of the British pound. Now, a sell signal was generated using strategy number 4 by itself, but if we apply the PET D, we see that it's a valid dynamic duo sell signal. So we're confident in taking this trade, and in less than a day, we could have potentially captured 150 pips. Let's look at a daily chart of gold, okay? This is a spot gold. As we see here, it's been going lower, but all the bars are green. Here's a valid dynamic duo buy signal, and look what happened. 175 points, basis points, coming into April. We all saw how gold was going up. Funny how, listening to the market, it told us that roughly about 3 to 4 weeks ago. And another currency pair, here's a 4-hour chart of the euro yen. Once again, looks as if the market's going sideways to nowhere, but all the bars are colored green, and most especially the bar above the buy signal is colored green. So that's a valid dynamic dual buy signal. And in roughly 2 days, you could have potentially captured 320 pips. That's over $3,000 per unit, potentially you could have captured. So you see, this works in different time frames, different markets, different directions. That's the beauty of the dynamic duo. So let's recap. Remember, when you combine a very consistent method, strategy number 4, this is a method I still use to this day, based on a pattern that repeats itself over and over again, and those 2 rules that I shared with you, and you combine that with the PET D, that's our color bar directional tool that signals what the short-term trend is, you have a high synergy for success, and we call this Specialist Trading's dynamic duo. It's one of our most popular trading methods. And of these 2 methods here, strategy 4 and PET D, the PET D is the most powerful because there are so many different ways to apply it. So let me ask you, do you think these 2 edges could have helped your trading this past year? I think your answer is yes. And because of that, we have a very, very, very special PET D attendee discount. This is something we've never offered before because it simply focuses mainly on the PET D and how it can really elevate your trading. Okay, so here's what we're going to do. We're going to throw into the special package The dynamic duo, obviously, since we talked about it today, that's strategy number 4, along with the PET D indicator. You're going to get the full rules and you're going to get access to the PET D indicator on your platform. But we're also going to throw in our candlestick combo. This is an entirely different strategy. It's based on a candlestick and candlestick patterns, but it's an unconventional candlestick strategy. And we're going to combine that with the PET D as well. So you're getting 2 strategies, entirely different, based on entirely different parameters. When combined with the PET D, really increase your odds for success. But remember, we're focusing on the PET D. And you not only can apply the PET D to strategies, but you also have certain PET D trading techniques that are based solely off the PET D. Let me share with you what I mean here. Here's an example in SFIX, excuse me. Now, obviously, you can see the stock has been going up and all the PET D bars have been colored, the stock bars green, okay? So conventional wisdom using the PET D says, okay, you should be a buyer or look to buy because the trend is up. But then the trend changed and we had the bars colored red. Now, this is a non-conventional way of trading with the PET D because based on this bar right here, this technique generated a buy signal. And I'll teach you how to trade this technique in the course. And you could have potentially captured 57 points in the next few weeks. That's a price gain of over 100% in just 3 weeks. Now, this technique, which is just one of many, also works to the downside. Here we have consistent red bars. Now, most likely you would say, okay, well, the trend is down, even though it looks as if we're just going sideways. But look what happened after that. We had 3 consecutive green bars telling us the trend had changed. But based off this technique, which is a counter trend technique, a sell signal was generated right here. And in the next 3 days, you could have potentially captured 132 points. This is just using a technique based off of the PET D. Now, you'll want to scan for these techniques, right? Well, guess what? We're going to offer you also scanners included with this great, great offer. So you'll be able to scan not only for PET D techniques, but PET D combined with strategies 4 and strategy 5. Let's say you are a PET D technique trader, okay? Well, here's how you would scan for that. On our platform here, you see you have the scanning page, the master scanner page for all these techniques right here that we list, that we're going to teach you in the course. All you have to do is hit load symbols, okay? And you have the symbol list provided right there for you. This can be ETFs, can be any market, the NASDAQ, S&P 500, currency pairs, crypto, can be foreign markets. We provide you with a list of all these different markets and timeframes. And once you click that on and get the list you want, then you just simply click on the techniques. Now here we've clicked on all of them, okay? And after you know what technique you're interested in, just click on scan. And you'll see in probably less than 30 seconds a list of green and red bars here. The green bars simply mean that there is a buy setup using that particular technique in these different categories here for the corresponding stock. And here, there is a sell setup. It's that simple. And this process takes less than a minute. You can do this each night and scan for a multitude of strategy signals or technique signals. As I said earlier, there are literally dozens of trading edges included in this exclusive PET D offer that are designed to take your trading to the next level. We're focusing solely on trading with the PET D. So this is our ultimate PET D trader course. You're going to get the full PET D course and special trading courses included. Here's the PET D. You're going to also get the PET D Plus. This is another way of trading with the PET D, and also the boot camp for trading with the PET D on our platform. Included, you'll get 2 of our most consistent trading strategies. Strategy number 4, which we talked about today, and an entirely different strategy, candlestick strategy number 5. On top of that, you'll get multiple PET D trading scanners. You can scan for either the stock signals or the trading techniques. Now, we're going to include an extra bonus. We're not even stopping there. For you advanced traders, we're also including our PET D Masterclass. This is where we cover everything included with the PET D. It's for more advanced students, but it's yours to keep. And as you progress, let's say you're not an advanced student, as you progress and learn more and more about the PET D and your own personal trading, the PET D Masterclass is a great, great course to have in your back pocket. You can apply it anytime you like. That is also included in this fantastic course. So, it's the ultimate PET D trader. It's our roadmap for any market. Now, normally, all of these things included would cost you probably tens of thousands of dollars, okay? Here's the special offer we have for you today. All the Pet D applications, the courses, the scanners, even the masterclass, all together, we're only going to charge you $19.97 and a monthly payment of $97 per month. Now, we realize that may be too expensive for some people. So if you decide to buy right now, if you sign up right now in the next day or two, Pro Trader Strategies, my sister site who handles all the pricing, has told me that they will waive the monthly fee and you won't have to pay every month. It's just one simple payment of $19.97. And trust me, we sell all these courses individually. It would cost you closer to $20,000 to get all of this. But this is a great, great way to get acquainted with us and to have everything that involves the Pet D. This is our ultimate Pet D Trader course. A year from today, if you're still where you are trading right now, a year from today, you will have wished you took advantage of this special Pet D offer. You don't want to be spending $12,000, $15,000, $20,000 for all of this that we're offering for less than $2,000. And remember, if you act now, well, you won't have to pay a monthly fee, just a one-time charge. Here's how to take advantage of this special course offer. Contact my sister site, Pro Trader Strategies. You can email them at trading@protraderstrategies.com, or I would suggest giving them a call at area code 310-598-6677. They have trading consultants manning the phones. They would be happy to answer any question you have right now. They'd take your order over the phone or just give you a quote if you're serious about purchasing it, or if you just want some more information. Okay, now that link you see at the very bottom for the Ultimate Trader, a Pet D Trader package, is posted there, but we've also posted it on the chat box, because the link you see in front of you is not a live link. If you click it, it won't do anything. But if you go to the chat box on your Zoom page there, and you just simply click on the chat box, little chat icon, you'll see that we have a live link there that has been tagged. So you can just click that on and we'll open up the page for you, okay? This is a great offer, but as I said earlier, I reserve the last portion of this presentation for any questions. So if you have any, now's the time. Just go to your question and answer box, hit chat box, or you can hit the question and answer one, and I promise I'll answer each and every one of your questions. Someone's asking, can this also work on futures? Yes, it can. I use this. I use the Pet D and Strategy 4 and all these other things as well, techniques on the E-mini futures, because that's my market of choice. That's the market I like to trade. So yes, it makes absolutely no difference. If you trade tick charts, yes, someone's asking, can you trade intraday? Yes. I know I didn't have a lot of small intraday charts here, but yes, I use it on 5-minute charts and lower. We also have students that use it on 10-minute charts in the currency pairs and the forex market. So it makes no difference. All these methods, all these techniques can be applied to any market and any time frame. That's how valuable they are. I know a lot of so-called educators say, well, this is a fantastic system, a fantastic strategy. And then you see that it only works a certain time frame and a certain market, a certain time of day. No, we believe at Specialist Trading that if something is valid, it should work all the time in any market and in any time frame. And I'm happy to say that all of our methods do. Someone's asking, how long does this offer last? Well, I would say because, the offer lasts probably for a week or two, but that's with the down payment. But if you don't want a down payment, if you don't want to be burdened with having to pay every month $97, well, if you simply take advantage of that offer right now and just pay the fee in full, then they'll waive the down payment entirely. So you won't be obligated to pay every month. Okay, that's a great, great offer, because a lot of people that have down payments with Pro Trader Strategies have been having them for months, and you won't have to deal with that. You'll just have one-time payment. Okay, so that's a great, great offer. It's a great discount, and trust me, you're being given and offered things that have taken me more than 4 decades to put together and accumulate for less than $2,000, and it's going to be yours for keeps. It's yours, and I'll be there with you every step of the way. If you ever have any questions, you can always email me, and I'll answer the questions as soon as possible. So this is a great offer to really take your trading to the next level. And as I said earlier, a year from now, if you're still where you are trading, if you're still frustrated, trust me, you'll have wished you would have taken advantage of this, because most likely the price will at least be more than double. So take advantage of it if you're really serious, or if you just want more information. Don't hesitate to call Pro Trader Strategies at 310-598-6677. The trading consultants are there to work with you. They're very flexible, and there's absolutely no obligation. They'll be there to answer any question that you may have, okay? Okay, if there are no further questions, I just want to thank you so much for attending today. I really hope you learned something about the PET-D and how powerful it is along with our strategies. But most especially as we take one last look at our disclaimer, I really want you to take advantage of this great offer. As I said, it's for a limited time only, and we really think that it'll take your trading to the next level. Thank you so much. I look forward to all of you in the PET-D course, and I wish you all the best of luck in trading. Thanks a lot. I'll see you next time. Bye-bye.